Hey guys, Eric here, Mr. Fired Up Wealth, and today I'm excited to launch a new video series on disruptive growth stocks, disruptive technology stocks. This was actually voted on by the Patreon group. This is what they wanted, and I'm excited about it. Now, if you've been following my channel at all for the last year, you know that I've been covering secular growth trends like cloud, 5G, autonomous driving, fintech, etc. The goal of this series is to cover 10 stocks, but I want to make those stocks diversified. Now, there's obviously a lot more than 10 stocks that I like for disruptive growth. I'm trying to find you the best of breed, and I'm trying to diversify the best I can into different buckets. So I'm going to do 3 total videos. Today, I'm going to cover 3 stocks, and then in the next few days or the next week, I'll cover 3 more, and the final video will have 4 stock picks for a total of 10. I'm excited to get started. Let's get going. All right, guys, this one was probably pretty obvious that it would be on this list, but I know there's some people out there, there's some shareholders, even in the Fired Up Wealth group and on our Patreon channel, that were really upset about this merger because they say owned Livongo and maybe didn't really understand TDOC and were upset because they wanted to own Livongo forever and thought there was a lot of growth potential. Now, I'm a shareholder of TDOC, and I have a video on TDOC on the channel. It's about a 20-minute video that breaks down everything about TDOC. It was from January before COVID, basically got to where it was in the United States. So obviously the pandemic, accelerated the company's growth and need. But I will tell you that this acquisition makes a ton of sense. This merger of the two companies really will unlock a lot of value. And I've got some notes here just from different research, and I've listened to a couple different interviews and read some articles. And what they want to do is unlock the full potential of virtual care. And I really truly believe that. It makes a lot of sense when you see what each company does and how they can complement each other. Livongo is about chronic illness, okay? And basically helping people with chronic illness live a comfortable life. It's pretty much all subscription type model when you think of Livongo. TDOC is about 80% subscription, and they also do some one-time visits, but they're about acute. So when you think of Livongo, it's chronic. TDOC is acute illness. So combining the two together gives you a best of breed, one-stop shop for all things health and something that can be done virtually. So they want to, through this unlocking of value, they want to deliver entirely new category of solutions, which I believe there are a lot of opportunities there for that. And they really will unlock tremendous value and scale. This is TDOC's website. And there's a really good video in here that if you're interested, you could take a look at. But I want to read these key merger highlights because I think this really paints a good picture for you. Let me zoom in. So it combines 2 highly complementary pioneers that redefine virtual care, digital health, and healthcare delivery. It significantly accelerates TDOC's vision to create a seamless continuum of virtual care across one platform. It creates first-of-kind, whole-person care offering that will fundamentally change how people access and experience healthcare. Personalized, technology-driven care, improving clinical outcomes, cost of care, and member convenience. Significant synergy opportunities through cross-selling across multiple channels, international expansion, which I think is going to be huge, and improved member engagement and new solutions. 85% 2020 pro forma year-over-year revenue growth. You got 120 million pro forma EBITDA and 200 to 300 BPS annual adjusted EBITDA margin expansion. So I think they're going to be able to unlock a lot of value. They're going to be able to, I think, grow a lot. I think this company has a lot of room to run. If you can get under $200 a share and you're holding it long-term for 2-3 plus years, I think it's a buy personally for me here. I've owned TDOC since I think $85-$90 back when I did the video in January. I know a lot of people that have Livongo that are up on that significantly, but under $200, it's a buy. ARK funds have been buying it as well. Definitely put it on your radar. Welcome to my most controversial stock pick of all time on the channel, where all the trolls came out to play. And you probably saw the video. I bought $20,000 of Tesla stock today, and oh my God, people lost their minds. But today it's actually working out pretty well. In fact, I bought it at a really good time, around $1,410. And today it's trading at actually over $1,800, up 10% again today. So who knows what will happen? Maybe it'll retract, as I told you on that Tesla video, and I'll put the link up. I won't spend a lot of time on Tesla in this video because I just did a pretty extensive video on Tesla just a handful of videos ago after their earnings. But this article is fairly new, and obviously one of the reasons that the stock is running is because of the stock split. So this Tesla's stock split should be a game over moment for Wall Street bears. Watch out. Again, trading at $1,814. The technicals look like it's going to go over $2,000 when you look at the chart. Last week, Tesla announced a 5-to-1 stock split, setting off a 20% rally for shares that were already at vertigo-inducing levels. So maybe the timing was a little lucky. I don't know, but I'll take it. So for bulls, it was a buying opportunity. For bears, it was more bad news. And for anyone wondering why Tesla is worth more than GM, Ford, FCA, and the VW Group combined, it was an education in how a negative thesis about a company can steadily fall apart. So real quick, I wanted to read this part too. Tesla is worth anywhere from $250 to $300 billion. That was before the run-up today in market cap these days after an epic rally. Tesla sold just over 367,000 vehicles last year, a record for Musk, but nothing compared to Ford, which sold almost 4 times as many pickup trucks alone. So very interesting. And then here it says, welcome to the parallel universe. It exists because the facts on the ground were indisputable. Tesla is indeed valued at stratospheric levels by investors who think the company is either a great bet on electrified transportation future or a great place to park money in a low yield world. And Tesla has indeed produced far fewer vehicles and generated far less revenue than its old school competition. A fair amount of bickering about this parallel universe has done nothing to make it go poof, returning us to a realm governed by proper business assessments. These bulls have kept on winning, and the bears keep on losing. So I traded this a lot, as I mentioned in the other video last year, but I went long at about $1,410 a share. I think that, it's pretty dangerous here after it just made another run. But regardless, when we're talking about long-term holds here, I like Tesla as a long-term hold in portfolio. I believe with ARK funds, I believe that it will be a $5,000 stock at some point. Time will only tell, but this is one where you could call, aggressive growth, maybe even a little speculation. If you follow my channel, I've got spec stocks. So for me, it's kind of somewhere in between. It's growth at spec. That last quarter was the game changer. There are some risks, of course, if they take away the government credits. Now they're not profitable and they don't get into the S&P 500. So there's always things like that to consider when you're investing. I wanted to get this video out before it made another 10% run today because I had a feeling it was going to do this. But the chart does say that it should go over $2,000 here in the short term. But do tread lightly. Take a look at Tesla, stock ticker TSLA. All right, so this is one of my favorites currently. If you're on Patreon, you probably have some good insight into this one, and you probably have some shares and probably cheaper than what they are today, hopefully. So Cloudflare, stock ticker NET, and it is one of those companies that is kind of misunderstood. People try to put it in the same category as Fastly. And if you followed the channel, you know that I've been bullish on Fastly since it was, $15-20 back in June of 2019. In fact, it was one of my first videos I ever did on the channel was a Fastly trading stock chart. I was doing some trading on it back then and then went long. I still own about 100 shares of Fastly long, house money. I'm now more bullish on Cloudflare than I am on Fastly for a few different reasons. And I wanted to read you this really quick. So this is basically a comparison, Fastly versus Cloudflare differences. And so, I don't want to go through all this because it's a lot of information, but what are some benefits of Fastly? Faster storefront delivery, instant content update, protection against traffic spikes. But what Fastly does, so Fastly is focused purely on CDN, like performance features, as well as delivering video. Now, Cloudflare is a security and performance service company, and they provide DDoS protection from those kind of threats. So you're talking about cybersecurity, and they also do WAF and CDN. So Cloudflare and Fastly compete on the CDN front, but Cloudflare is a much different company than Fastly and has a lot more different products that they can offer. So Fastly doesn't offer any DNS services. And going back to this, you can see, I'll post a link. You can read this on your own because there's kind of a lot of information here, but there are some, differences. So what are some benefits of Cloudflare? Single click application settings, auto minification, advanced security, large optimization, browser caching, etc. They have their own basically network across the globe, over 100 different data centers across the globe. Cloudflare does. And so when you think of edge cloud computing, they do things a little bit differently than Fastly. There's things like workers you can research, etc. But just know that Cloudflare a lot of times can be a little bit faster, can have a little bit better security in certain circumstances. But you also have to remember things like this. Shopify uses both Cloudflare and Fastly. So, they're both great companies. I like both of them long. I just think Cloudflare is positioned really well at this price point. If you can get this thing for under $40, I saw Pete Najarian on CNBC earlier. He's buying Fastly calls 1 week and $42. So it looks like there'll be some maybe short-term movement on this one. It's up 2.26% today, but a lot of the cloud plays are. I wanted to show you this too. So Cloudflare operates a cloud platform that delivers a range of network services to businesses worldwide. The company provides an integrated cloud-based security solution to secure a range of combination of platforms, including public cloud, private cloud, on-premise, software as a service applications, and Internet of Things devices. Its security produces products comprised of cloud firewall, bot management, distributed denial of service. So that's the DDoS that we are talking about earlier. Infrastructure protection, IoT, which is Internet of Things, SSL, a bunch of stuff that you might not care about. There's, you can read all this stuff. Virtual backbone, DNS, yada, yada, yada. I want to go to this part. So the company provides solutions to protect an organization's internal resources such as devices, users, applications, and data comprising zero trust security and access management, which secures, authenticates, and monitors user access to internal applications and infrastructure hosted on-premise or in cloud environments and secure web gateways. Additionally, it offers consumer DNS resolver, a consumer application to browse the internet, and consumer virtual private network, VPN. It also says here that the company serves customers in technology, based across the board, healthcare, financial services. And they also have strategic agreements with Baidu and JD Cloud, both, of course, Chinese firms. And the company was founded in 2009 and headquartered in San Francisco. And that's the Discord. So if you guys want to join that, it's awesome. You have to go to Patreon, sign up for Patreon. You can get access to the Discord, but we're basically talking to each other all day long and getting trading ideas. It's really cool, especially the elite services. I actually show you what I'm buying and selling on a daily basis, my entry points, technical analysis. We do live streams in there, all kinds of cool stuff. It's a educational type deal. I wanted to show you Cloudflare's website. So Cloudflare for infrastructure, you got security, you got performance and reliability. It's serverless application platform. So this deals with the workers KV and the analytics, and it gets a little deep in that stuff. Just know that these guys are doing a really good job when it comes to the serverless applications and the edge cloud. Their products, they have all those. We kind of talked to some of these earlier. There's another Discord chat. I need to turn that off when I'm making videos. Hello, William Steele. Solutions, you got performance, security, all the different industries. They do actually integrate with IBM Cloud, Google Cloud, Rackspace, Azure, etc. Wanted to talk about, there's another, I need to turn that off, sorry. So they're trusted by about 15% of the Fortune 1000 customers. Provides a scalable, easy to use, Cloudflare chatbot. Hello. Thanks for visiting us at Cloudflare. Here's an overview of our enterprise services. How can I help you today? That's pretty cool. So you can see here, close that. Trusted by 27 million internet properties, including Shopify, LabCorp, National Instruments, Mars, L'Oreal, and others. They've got enterprise support, so monitoring 24/7, 365. This is really a complete integrated cloud network solution. They are doing some disruptive things when it comes to how they're transferring the data, how they're working their data centers. They're growing significantly. I think there's a lot of room for market share. Take a look at this one, guys. Multi-cloud made simple. This is Cloudflare, ticker NET. All right, I'm coming back and editing this into the video because I wanted to make sure I covered it. It's really important. Now, this was also in Patreon. This was posted over the weekend. But there was an upgrade from an analyst, and just want to read this quote. Attractive long-term opportunity. Cloudflare's purpose-built cloud solutions address the complex security and website performance needs of a broad customer base. Penetration into an attractive $30 billion TAM, or that's total addressable market, depends on the strength of security products and a swiftly expanding solution portfolio, including Workers for the emerging edge cloud computing opportunity and Access Cloudflare for Teams remote access. So Microsoft Teams remote access. Morgan Stanley's Keith Weiss added, edge computing is a crowded field, and one of the companies that Fastly competes with is Cloudflare. I mentioned it earlier, mostly in CDNs, but in some ways, it's not accurate to say that Fastly competes with Cloudflare because the latter, Cloudflare, has a sizable advantage in virtually every category. In addition to that, many companies may use more than one CDN. In fact, that's the case with Shopify, who uses both Cloudflare and Fastly. All right, guys, thanks for watching. Just a quick recap. Before I do that, if you've gotten this far, then you're probably an actual investor who likes to do some research, who likes to look at fundamentals and technicals and make long-term decisions when buying. So if you are an investor and you're interested in an investing community, essentially an investing club, I recommend that you join or at least check out our Patreon group. You can just go Google Patreon. That's Patreon plus Mr. Fired Up Wealth, and you'll find the Fired Up Wealth Patreon group. Now, there's different tiers you can join, but I do recommend checking that out if you're a serious investor. There's a great community. There's a lot of people to learn from, and I share the top 2 tiers. I share all of my picks, like what I'm buying, what I'm selling. I'll give you technical price points. So it's not just like some of those services you get where they send you an email and say, here's our picks for this month. I'm actually telling you how much I'm buying, how I'm buying it, the strategy behind it, how long I'm going to keep it, all those different things. If you haven't subscribed, please do. Obviously, I do these videos at no cost, as well as a Facebook group. So you're welcome to join both of those at no cost and get some insight into what we're doing from a high level on the YouTube channel and the Facebook group. Subscribe, click the bottom right corner, and then there's a little bell. You need to click that bell to get notifications. And again, you can check out the Facebook group. So what are my thoughts of these 3 picks? So obviously I like all 3 of them. I own all 3 of these stocks long. I'm up significantly on all 3. So that does make it a little bit challenging if, say, you don't have any of this in your portfolio. I always recommend dollar cost averaging. I generally do 25% at a time. Now with Tesla, I went a little bit more aggressive than that. I did 20,000, 22,000, and I had about 30,000 left. So I did much more than my typical 25% because I was really confident on it. Cloudflare, I bought in multiple buckets. I bought in 2019, that was up 130%. And then I added a bunch, in the last several days with the dip. And so I'm looking at, I've got about 350 shares and I'm green on that. And I think that's a $50 plus stock in a year. These are all my opinions, guys. This is what I think. And then of course, on TDOC, I mentioned earlier, I bought that one around, I think it was between $85 and $95, somewhere in there. But, I like all 3 of these long-term. You just got to be careful about how you're buying them. Tesla, I think someday Tesla probably is a $5,000 plus stock. TDOC is probably $250 in the next maybe year. I think Cloudflare is probably a $50 stock in the next year. These are all my opinions. This is what I'm doing with my portfolio. Thanks for watching. I'm excited to bring the other 2 videos to you. So again, this is the first video of a series of 3 videos, and I've got another 7 stock picks to bring to you. So if you haven't subscribed, please do. Thanks again for watching. Have a great rest of your day. Take care.